what the Fed does with interest rates, but what if I told you there's an interest rate you never see? One that actually decides whether your money is cheap or expensive, even if the Fed doesn't move a thing. Today, we're going to be talking about rStar, the neutral rate of interest, and why it quietly runs the economy behind the scenes. Right? This is an AI generated intro that I have downloaded here from ChatGPT to discuss what it is that's taken place with the neutral interest rate and how it affects the economy. And what I came across was some pretty good information that I thought I would share with you, because I believe that the neutral interest rate is probably the most important thing that anybody who is following the economy should be watching. The neutral interest rate is by far the most important one out of all the rates that are out there. Unfortunately, you'll never be able to see it because there is no observational position in which that you can look at to see the neutral interest rate in real time. The neutral interest rate is somewhat invisible. Now, what is the neutral interest rate? What is rStar? It is the rate where the economy is in balance, not overheating nor stalling. Now, this is when the Federal Reserve is sitting in a position in which that they are neutral. The Fed funds rate doesn't accommodate nor restrict the economy. It's neutral, right? Now, the Fed doesn't set this rate, right? But it does try to keep actual rates around it. So if they were to keep interest rates or the Fed funds rate at neutral, they would neither be accommodating nor restricting the economy the entire time. However, neutral moves, right? Now, why is it invisible but powerful, right? You'll never see it in your bank account because it's an estimate, right? It changes based on demographics, productivity, savings, and global trends. Now, this is kind of interesting to try and think about, like, why is it that the interest rate would move or the neutral rate would move based on demographics, productivity, and savings rates? These are invisible actions that most people do not look at as far as the inflationary pressures that come when you see demographics of older people, right? When you have an older population, this has a tendency to slow inflation down. They do less spending. Right? You have productivity. Right? This is where people are moving out and starting businesses and expanding operations. Right? This is another one that it's very difficult to understand what is happening across the globe. Right? And then savings rates. Well, this is pretty interesting to think about savings slowing the economy down. If you are saving money, you're not redeploying that back out there into the economy, and this has a tendency to slow the activity down. Well, the neutral interest rate moves on these particular indicators that are out there within the economy. And again, not a lot of people can observe these things in real time. So now, what do we end up seeing when the rStar rises or falls? Right? Now, rStar is an indication from the Federal Reserve on where the neutral interest rate is positioned in accordance to the Fed funds. Now, this is kind of, now we're getting really deep. But it's really easy to understand. If you see rStar falling, like if you go to the Federal Reserve and you type in estimates of rStar, you're going to see a graph that moves up and down just like any other graph of the stock market or anything else. When you see rStar falling, what you are actually looking at is the gap between where the neutral interest rate and the Fed funds rate is. So if the neutral interest rate is rising and getting ever closer to the Fed funds rate, that gap begins to shrink. Now, if this gap is shrinking, that's rStar falling, right? The neutral interest rate rises, the gap gets smaller. rStar is that gap in between where the neutral interest rate is and where the current Fed funds rate is. And if neutral interest rate rises and the gap shrinks, rStar is falling. So this is important to understand because this is how the economy is now being stimulated. The Federal Reserve doesn't move. They sit on their hands. But if they put out an expectation that can raise the neutral interest rate, rStar will fall, the gap shrinks, and a stimulating effect or a less restrictive effect will begin to impact the economy. Very important to understand because this is how the Federal Reserve is conducting themselves on whether or not they want to create a stimulating effect or a tightening effect is based on the elevated inflation expectations or the diminishing of that. If you elevate the inflation expectations, the worry of tariffs, the worry of, issues coming that is going to cause prices to move up, supply chain breakdowns, then what you're going to see is that elevated inflation expectation starts pulling the neutral interest rate ever higher, drops the rStar gap, makes that economy less restrictive, and now here we have some resilient economy, and people are wondering why. Now, expectations is the game changer. This is how the Federal Reserve is now conducting themselves. They don't have to move, right? If people expect more inflation, the real rate drops, even if the Fed doesn't do anything. Right? Higher expectations raises the rStar, which narrows the gap and eases conditions. The Fed can affect expectations just by what it says. That's why the speeches matter. And this is something that I have constantly tried to push out there on why it is that we need to follow what it is that the Federal Reserve is communicating through their speeches. Because what they are communicating through their speeches is very different from what it is that they are communicating out there to the mainstream media. This matters to everyday people. Right? The hidden rate affects mortgage rates, car loans, job growth, and inflation. To understand that when the inflation expectation rises and pulls the neutral interest rate higher, it makes the economy less restricted. You can now position yourself in accordance for this. Most people will never recognize this. This is counterintuitive to what it is that most people would be looking at for what is coming from the Federal Reserve, inflation expectations, and the adjustment of interest rates. Most people are stuck in a position in which that the Federal Reserve and the adjustment of the Fed funds rates is the main monetary policy tool, and that at the lower rates, they can stimulate the economy or make the economy less restricted. But very, very, very few people can take into consideration that if elevated inflation expectation runs consistently and very pronounced and, I guess, overwhelming, I guess that's a way to say it. It will pull the neutral interest rate higher and make the economy less restricted. The Fed can stand still. They don't have to do anything, and yet the economy will become less restricted on an elevated inflation expectation. This is something that is it's so esoteric in the form of understanding this. However, the understanding of this position is by far the most accurate way of looking at the economy right now. Right? There is literally no other way of looking at this that is going to be as accurate to understanding how it is that the Federal Reserve is conducting themselves. Remember, the information that I got is coming from an AI delivered chatbot that I have pushed an incredible amount of information into in order to achieve some of the things that I am getting from it. This is merely a guideline. What it is that I am asking of it is by far the most in-depth questions and statements that I could imagine on monetary policy that this thing could process. Nothing came back from this that surprised me. Literally nothing. Everything that I got back was very much in line with what it was that I believe was taking place within the economy. Now, finding news articles, almost impossible. Finding any other form of distributed information that talks about how the rStar is rising on an elevated inflation expectation, reducing the amount of restriction within the economy is literally non-existent. You have to go and research this for yourself because nobody else is going to deliver the information to you. I have been talking about this for years and years that I have been putting out information, focus in on the neutral interest rate as the main policy of the Federal Reserve, and they are able to adjust the neutral interest rate through the expectations of the people based on the elevated or less elevated inflation expectations that are being pushed out there. Okay. Once you see it this way, now you can understand how it is that the economy seems to be doing so well. I was at the Rebel Capitalist live event this weekend. I had Jason Hartman, Ken McElroy, and Robert Helms up on the stage, and I was on a speaking panel with these guys. These are some of the biggest names in real estate. I don't know how much money or how much, real estate there is owned between the three of those guys up on that stage at the time, and they were asking me my opinion on what it is that I was seeing from the lumber supply industry. When I shared the information about how an elevated inflation expectation raises the neutral interest rate, moving ever closer to the Fed funds rate, making the economy less restricted, I kid you not, every one of those guys looked at me like, huh, like this is not it. They knew it intuitively, right? The information is already there within these guys. They study this stuff as much as I do, but very few people have put it into consideration the way that I have done, that says focus in on that neutral interest rate and the expectations of the market. If that neutral interest rate moves ever higher, it's going to make the economy less restricted. Once it occurred to them to look at it that way, it made so much more sense. Now all of a sudden they're looking at it in a way that says, yeah, right? Ken McElroy was talking about a bunch of projects that he is getting involved with and starting right now, even though the general feelings that is coming from the builders market, like from the home builders out there, even the big time commercial builders, they feel very negative about it. But yet Ken McElroy was saying, hey, the numbers are working out for him. And it wasn't like he didn't know why, but it didn't seem like he understood it from this point of view. And when I cleared it up for him, it made so much more sense. I'm not trying to say that I all of a sudden gave Kenny McElroy some profound information, but I think I gave him a way of looking at it that gave him a much clearer understanding of what it is that he was seeing within his own industry. Okay? And this is important. Like the average person, this is probably the most important thing. Like if you can understand the neutral interest rate, how it is that the Federal Reserve is using that neutral interest rate to conduct monetary policy by elevating or dropping the inflation expectations, making the economy restricted or less restricted. If you can understand that, you will be miles ahead of 99% of the economists that are out there talking about the monetary policy. You will be so far advanced that you will actually blow them away on how much knowledge you really have on the economy. But it's not that hard. Studying the neutral interest rate, becoming familiar with what it is, understanding how when rStar is falling, that's the gap between the neutral interest rate and the Fed funds rate shrinking. This is making the economy less restricted. Right? This is a stimulating effect. The Fed doesn't have to lower rates, they have to raise the inflation expectation. It does the exact same thing. Most people don't see it. So if you got threats of tariffs and broken supply chains and all kinds of havoc that is coming to the future, and people's elevated inflation expectation runs persistent within the economy, it pulls that neutral interest rate ever higher, and bang, the economy becomes less restricted. They can if they continued on and continued to raise the neutral interest rate with elevated inflation expectation, it could actually find itself above the Fed funds rate and be stimulated. And again, the Federal Reserve had yet to move. This is information that is so important, so critical to your decision-making process, and it is so counterintuitive to what it is that most people are looking at. Right? But it is by far the most accurate way of looking at monetary policy. All right, $1.99. Let's go check out this super chat. All right, Django Geek, loving the thumbnail. Thank you. Again, I want to, give credit where credit is due. These are AI generated thumbnail, AI generated title, AI generated description and all that other stuff. But the information that I am putting out here in this video is straight up directly from me. And this is the same type of information that I have been trying to share with you guys for well over a year. This is it. Understanding the neutral interest rate, even if you are brand new to the economy and you've never, ever studied anything before, and you're trying to figure out what it is that's going on, start with the neutral interest rate. If you can identify what it is that the neutral interest rate is and what it means to the Federal Reserve and the central banking, and how it is that expectations move the neutral interest rate, you will be miles ahead of anybody else who is out there. I mean, you realize, I explained this to Joseph Wang, and he gave me a look that was I know. I just never think about it. I didn't think about it that way. He didn't say that exactly, but Joseph gave me that look. He knows so much about the Federal Reserve and monetary policy, it is just unreal. Like, I'm not trying to say he didn't know. When I was explaining the idea of the neutral interest rate rising, making the economy less restricted on an elevated inflation expectation, he knew every single word that I was talking about. He understood exactly what it was that I was meaning. And when I gave him that, like, idea that the neutral interest rate is going to move closer to the Fed funds rate, making the economy less restricted, it like dawned on him. It was like, oh yeah, duh. Right? Like, he knew it the entire time, but he hadn't thought about it in that way yet. And this is really why it is that I believe that the Uneducated Economist and what it is that I am sharing here is by far the most unique, most accurate way of looking at monetary policy if you are a working class individual. Like, if you're a big time investor or something like that, maybe it doesn't work for you. Maybe it's not good, valid information. But if you're a working class individual person who's trying to figure out what they need to do with their daily lives, whether or not they're going to be buying that house or buying that car or taking that vacation or moving their stuff moving their money into an investment or something like that, what I share is by far the most helpful stuff that you could ever possibly internalize. Understanding, again, that neutral interest rate and how that operates and how the Federal Reserve looks at it and how it moves on an elevated inflation expectation or not, again, miles ahead of anybody else. Okay. The way you look at it is definitely unique. Well, thank you, Deplorable. That's why 30 fixed rates debt is so crucial to us here in the USA. Yes, but then tariffs seem to do the opposite. Take a look at uncertainty on the marketplace. Everyone is selling, not buying stuff. Yes, but that in turn, right, is the credible threat of elevated inflation expectation that comes from the threat of tariffs, which we can already see are moving on. I mean, what was that statement? Like, I was going to do a video on it today, but I just kind of decided to let it go. And that is what, the taco trade? Trump always chickens out. What tariffs? Man, I've been saying it the entire time. What tariffs? Every time the tariffs are announced, here we got this 125% tariffs, all these major tariffs that are going to overwhelm and consume and destroy everybody out there in 90 days. After the workarounds, after the exemptions, soon as they get the negotiations done, right? All of a sudden we realize there are no tariffs because Trump also always chickens out. No, there was never intent. There was never an intent to inflict these tariffs from the beginning. It was all about raising the inflation expectation. If you raise the inflation expectation, you will raise the neutral interest rate. You raise the neutral interest rate, you make the economy less restricted, and we have a resilient economy. This is what's happening right now, guys. I mean, there is no other way of explaining this, considering that this is exactly the way I've been explaining it for over 2 years now. Right? I didn't know that they were going to throw the credible threat of tariffs out there. I just knew that they were going to try and keep their supply chain broken. They were going to try and keep the elevated inflation expectations persistent. Right? This is what we are now experiencing. And the more you experience an elevated inflation expectation, the less restricted the economy becomes because it pulls the neutral interest rate ever higher. This is working. It is so working. Right? I mean, and like, a lot of people think that there's confusion and chaos and uncertainty. They're using that they deploy that into the people's brains in order to push their expectations higher on inflation, raises the neutral interest rate, and the economy becomes less restricted. And all the bigwigs are out there going, yeah, look at our stock prices move. Look at all the awesome economic activity that's happening out there, counterintuitive to what it is that the people would truly feel that is happening, considering that the fear and uncertainty and doubt that is being pushed out there into the economy, people would perceive that as bad, but yet it pushes the expectations higher, making the economy less restricted. It's actually benefiting. It's hard to see it that way because it works counterintuitive to the people's feelings. But if you recognize it from the beginning and know that they are going to use this information in order to position themselves in a way that they don't have to move, and the neutral interest rate will come to them. It works, and it's working right now. Right? Threats of tariffs and then alleviation of tariffs. And then they go like, oh, Trump doesn't know what he's doing. Taco trade. Trump always chickens out. No, he never intended to do it in the beginning. It was never the intent to inflict these tariffs. He's not chickening out. He's not trying to negotiate. He was trying to raise the inflation expectation, pull the neutral interest rate ever higher, making the economy less restricted. Bang, there it is. Right? And there's going to be a million people out there who will hear that and think, nope, you're wrong. and they all have their own understandings from a political mindset on why it is that the economy is being conducted in the way that it is. What they have done is they have fallen in line with the power pendulum that is now zapping their passion. Because I guarantee you, they are going to be so passionate about the reasonings behind the tariffs and the implementation of it in order to bring back manufacturing and all this other stuff. When it fizzles away, they're going to be left drained and deprived of the passion that they could have been using to advance themselves in a more profound way that is beneficial to their life. But instead they jumped on to this idea that will eventually fizzle out and will take their energy with them. Okay? That's the unfortunate problem with following politics and economics at the same time. Okay? Understanding economics is a much better thing to do from a personal point of view, as you have control over your own economy. Right? Everybody is responsible for their own. You interact with other people's economy, and as a whole, there is nothing that anybody can do to make the economy better for you. Only you can do that. Right? All right, moving on here. 183 people watching with 51 likes. Keep hitting that like button, everybody. We're going to be out here for, I don't know, maybe another 10, 15 minutes. Taco is catchy, though. It is a catchy little term. We are sorry for your loss, Deja Vu. Oh, no, Deja, what happened? Thank you, everybody. I am with my internet family, and I can't thank everyone enough. Oh, my gosh, Deja, did you lose somebody? My family, the matriarch of my family passed on Saturday. Mom, wife, grandmother, aunt, 93 years old. I should live that long. Wow, Deja, that was a long life. 93 years is a very long time to be on the planet, and I am also sorry for your loss. But, to think that 93 years of existence here, that's a great gift to have. Right? If money originates from the politics, how can you take politics out of the economy? How do you say that money originates from politics? Do you think that money couldn't exist without politics? Think about it this way. Is there a way that the economy can function without politics? Like, does the economy only exist because politics exist? Right? Politics enters money into the system. Yes, this is now giving us the ability to do transactions, but we don't need government to do transactions. We can do transactions all on our own, regardless of the government. Right? So to understand that there is an economy that is operating regardless of government, and government interacts with our industriousness, right? And they are the ones who are now trying to say we control it, but they don't. They are merely in an environment in which that the most industrious people out there has risen the capability for a power structure to exist. I don't know how else to describe it. If you had a bunch of guys who were sitting over there on the ground not doing anything, and then you had a couple of bigwigs come in and say, hey, go be industrious, they would give them the finger. Be like, get out of here, man. I ain't listening to you. Right? But if you had a bunch of people over there who were being very industrious and they were producing and profiting and doing very well, then you can have a group of men come in and say, hey, somebody needs to regulate this power and govern this power that you have created. Right? The people have to be industrious first before government can exist. They're not in charge of the money. We're in charge of use of the money when we make that decision to use it. We don't have to use dollars. We want to do transactions, and dollars are the easiest thing to do it with. So we rely on the government for the dollar, but we don't rely on the government to do transactions. We could do that all on our own, regardless of government. In fact, we should. The more we can get them out of our life, the better. And then you got to also understand that the underlying economic forces are still at play regardless of government. In fact, I had this conversation with the guy over the weekend at the Rebel Capitalist. It kind of got a little heated, as we were sitting there discussing this. And I had to recognize for myself that people have positioned themselves so much in a way that relies on the political decision. Right? I didn't do that. Like, a political decision can be made. It doesn't affect my life one way or the other because I didn't give it that meaning. Right? If you have given it the meaning, the moment that that decision is made, now it impacts your life in a huge way. You might have been making decisions on investments, on business, and all this other stuff, focused in on a political atmosphere to make those decisions. And the moment that that political atmosphere doesn't align with the way that you had intended, now all of a sudden you got a whole disruption to your life. I never focused in on that. I didn't position myself for it. And now I know for somebody who has, makes it very difficult for them to understand how it is that that doesn't affect my life when it affects their life so profoundly. But it's to understand that you have positioned yourself in accordance to the power pendulums that you have joined in on. Mainly looking at the political atmosphere, saying that if it goes this way, I win. If it goes that way, I lose. And because you have put yourself in that position, one way or the other, it will happen. Okay? I didn't do that. You know, regardless of who is president, I make decisions based on the environment that I see, and hopefully I'll make the right decisions, and they are not going to deter my life or enhance it by any means. Right? They can't. Only I can do that. I get how tariffs were just a way to raise inflation expectations, but won't there be a bullwhip effect the other way when everyone realizes that? Nobody's going to realize it. Nobody's going to realize that was the purpose of it. That's the funny thing about this whole concept in the credible threat theory that I have developed over the time, is that there's nobody who's going to figure this out. Like literally the idea of the neutral interest rate is some sort of far off concept to 99.9% of the people. Like nobody understands it. Literally nobody. Right? Nobody incorporates it into their strategies. Nobody is thinking about like how it is that the neutral interest rate is rising, making the economy less restricted, and that they should be taking advantage of that situation right now. Like nobody talks about it. Nobody sees it. And as far as I can tell, unless it comes out on the mainstream media, nobody is going to. Literally, like they're not going to. You know, so you should feel fortunate that you actually have access to the understanding that there is a neutral interest rate that exists out there, and that you can start researching it on your own to figure out how it is that you need to position yourself in accordance to it, because nobody else is doing it. People who are saying the Federal Reserve needs to lower interest rates needs to take into consideration how far do they need to go before they hit neutral. Like how much does the Fed need to drop to stimulate the economy? Well, the next question should be, where's neutral interest rate? That would determine on how far the Fed needs to drop to stimulate the economy. Because if the neutral interest rate is close to zero, well, then the Fed would have to drop interest rates a lot. But if the neutral interest rate is close to where the Fed is today, they wouldn't need to drop very much in order to be stimulating. Right? Understand that the rising neutral interest rate is the Federal Reserve literally regaining their ammo. Problem, they can actually end up with too much ammo. Can you believe that? Like the neutral interest rate continues to rise, and all of a sudden they find that the neutral interest rate has moved above the Fed funds rate. Now the Fed, who have been trying to say we are in a restrictive monetary policy trying to control inflation and keep inflation down, well, now the neutral interest rate has moved above the Fed funds rate because people are so persistent with their inflation expectations. It pulled the neutral interest rate above the Fed funds rate. Now the Fed is positioned in an accommodating, now the Fed funds rate is positioned in accommodation. And they still haven't moved. They've gotten too much ammo back, right? Now they need to raise rates even further in order to get above the neutral interest rate again. Now, do I believe that is happening? Could it? Sure. Is it? No. We're still below the neutral interest rate. Go and look at rStar. I didn't leave a link down in the description. I'm sorry. Just type in rStar estimates, Federal Reserve. You can go and find a chart that will show where the rStar is falling. That is the gap between the neutral interest rate and the Fed funds rate. It is shrinking. This is the reason why the economy seems to be so resilient. It's because the Fed is actually lowering rates, right? The real interest rate out there, by elevating the inflation expectations, making the economy less restricted with the shrinking of that gap, that rStar gap, right? Understanding that, I repeated it over and over again, but if you can internalize that, if you can see it for yourself, if you can explain it, right, then you will have internalized that information. You will see the economy so much differently than everybody else. They will be looking at the Federal Reserve saying, "Oh, they're too tight. They're, keeping things, restrictive and all this other stuff." The very next question should be, well, where do you feel the neutral interest rate has moved to? Because if the neutral interest rate is rising, rStar, the rStar is falling, that's the gap, right? If rStar is falling, the neutral interest rate is rising, then what you are finding is that the Federal Reserve is actually moving into more accommodating positions by standing still, elevating the inflation expectations. This is good, right? This is the only place that you really find this kind of information. 173 people watching, 74 likes. Thank you so much for hitting that like button. Please continue to hit that thumbs up button. The YouTube algorithm will grab the video, spread it around for more people to join in. And again, understanding how this works is going to give you so much more advanced understanding beyond what, again, just about every single person out there would understand and believe. I mean, again, when somebody says the Fed should be lowering interest rates, the very next question you should ask them, well, where do you feel the neutral interest rate is? If they look at you with deer in headlights, you know that they have no clue. You know they have no clue. That's it. That's all there is to it. If they say the Fed, if you hear anybody say the Fed should be lowering interest rates, the very question that you should ask, where do you feel the neutral interest rate is? If they cannot answer that question, then they have no clue. They're done. Right? The number one thing you should know, neutral interest rate. Number two, inflation expectations. That's it. Once you have internalized, locked those things in, really understood them, all the monetary policy, all the stuff that you see out there, all of a sudden will become so much clearer. You will have a much better understanding of what it is that's being said out there, and how that statement and how that narrative is impacting the decision making of the people, and how it is that neutral interest rate can be adjusted simply off of those expectations. Internalize that and you will get it. You will get it better than anybody else out there. I can't find the exact neutral interest rate, but it's because there is no exact neutral interest rate. I keep trying to say that. You cannot observe the neutral interest rate in real time. There are estimates of the neutral interest rate. It's referred to as rStar. You can find that at the Federal Reserve. rStar estimates, Federal Reserve, just Google that. What you are looking at is the gap. When you see rStar falling, you are seeing the gap between neutral and the Fed funds rate shrinking when that rStar is falling. Okay, just think about the distance between the neutral and the Fed, and if that's getting smaller and smaller, that number is dropping. Right? And this is the only way that you can observe neutral interest rate, because there is no way to observe it in real time. You can have guessing games on where you think it's going based on elevated inflation expectations, that the people themselves are talking a lot about it, and how the Federal Reserve is losing control and how they may have to raise rates because of it. You can probably be pretty sure that the neutral interest rate is rising on that narrative. Right? Okay, I have a question. When are you getting Powell for an in-truck interview? God, that would be so awesome, wouldn't it? If mortgage rates are typically 1 or 2 interest rates above the Federal Reserve 10-year, you're talking about the Treasury 10-year? Then yes, I would assume that our star is at about 1%. But how does knowing this translate to real life experience? No one's spending money they are selling. I don't agree with that. There is plenty of people who are spending money right now, and it's the ultra elite, the rich, the higher end of the inequality wedge, right? Those people are spending money. Why? Because the economy is less restricted right now, and it is giving them the ability to then profit from this situation. Most people can't see it because they're stuck on tariffs are going to bring jobs back, right? They're not even looking at the right direction. When I have guys like Kenny McElroy who are showing their projects that they are starting, saying, man, this is working for me, and almost couldn't explain why. And then when I say to them, hey, the neutral interest rate is rising, making the economy less restricted right now, it's like this aha moment, like, oh yeah, that does make sense why it's working now, right? The further the expectation goes up, right, the further the elevated inflation expectation pulls the neutral interest rate higher to the Fed funds, shrinking that gap, the more accommodating or less restricted the economy is. It's somewhat accommodating, right, to the economy. So is the Fed measurement online the gap? Yes. So when you're looking at rStar and you see that rStar falling, that is showing the gap is shrinking. That means neutral interest rate is rising. You could see that also shrinking. If the Fed was to lower the Fed funds rate, you would see rStar also coming down because the gap would be shrinking. If the Federal Reserve was to raise rates and the neutral interest rate was to fall, then you would see the rStar moving the other way, and it would start creating this wider gap. So yeah, when you're looking at rStar and you see rStar falling, right, that is the gap shrinking, right? And you can actually see it in the trend too, because if the trend is rising, that's the neutral interest rate moving up, and the rStar is falling, that's the gap shrinking because the trend is moving ever closer to the Fed funds rate. Does that make sense? Am I clear enough on that? What time is it? All right, I got a few more minutes here. It reminds me of the gold to silver ratio, yeah. Lure Powell with free fluffy dice. That's funny as shit. Yeah, these are all-nighters. All-nighter brought that to the Rebel Capitalist for the Suburban. So thank you, All-Nighter, for that. All right, the neutral interest rate will naturally rise with 8 years since 2021 because most people get new mortgages before 8 years. I don't know if I would necessarily agree with. I mean, you might be accurate, but I don't necessarily agree with the reasonings, right? The neutral interest rate would rise on account of an inflation expectation, right? That's demographics issue, global growth, savings. Right? So now there is issues where you have population that is getting older, you have the slowdown in global growth, and you had that wider wedge between the safe liquid assets like U.S. Treasuries and the risk assets like corporate bonds. This is proving the savings rates are extreme. If you move from savings into production, right, you move it out of savings and you deploy it out there into the economy. Now what you are going to find is the neutral interest rate rising. If you have a low interest rate and yet you have an overwhelming savings, people are not worried about inflation, right? They'll hold on to cash with a low interest rate because they are not worried about inflation. But if inflation expectation rises, they are not going to sit there in cash with a low interest rate. They will deploy that out there into the economy. So it's important to understand all this stuff from this direction. Like, this is where it starts getting very deep, to understand how the neutral interest rate really is a ghost in the machine. That's really what it is, right? And how it is that this neutral interest rate can rise and fall off of expectations alone. There is no mechanical way of dealing with it to say, oh, we're going to adjust, or we're going to price control, or we're going to yield control, or this other stuff. The neutral interest rate can move regardless of all that stuff, right? So the only way to control it is really through psychology. All right. The honest fear is deflation. There are no ways to get rid of it. Let's see here. Mama bought that pair. She right here with me. If anyone wants to thank her. Well, thank you so much. I thank you. All right. Safety meeting, and I'm looking at the dice. Did I see those in Florida? Yes, you did, Wang. Here, let me give him a spin. All right. It's important not to put yourself into a box when thinking about economics or anything else for that matter. No, you're right about that. It's important not to put yourself into a box, but it's also important to be able to articulate what it is that you are disbelieving, right? So in the case for me, like to remove politics out of my view of economics will absolutely destroy some people's belief system. Absolutely destroy it, because they have built their entire belief system off of politics being in charge of economics. And in their world, that is exactly accurate. It is exactly accurate, because each and every single one of us has our own economy. They built theirs off of the idea of politics. I did not, right? Now, however, I can talk the political game. There was a time in which, and believe me, if I was to get back into it, I could do it really well. There was a time when I was very much involved in politics. I was never more confused about monetary policy, the economy, as much as I was when I was listening to the political realm. Right? Never was I more confused. The moment that I exited them out of my life and out of my belief systems and how it is that I was going to do the research and following the money, I realized that they are literally the block that keeps people from understanding what is going on within the economy, because they focus so much on this political realm and they believe that that is what is in charge. What they are focusing in on is a symptom. Okay? It's like literally saying, what do we need to do to fix the headache that I have so I can go back to work? And then they think about the pills and they think about the, all the different things that they could possibly do to get rid of the headache. And meanwhile, there's another guy over there saying, maybe you shouldn't drink and party it up the night before and you might be feeling fine today. Oh no, man, got to deal with the symptoms, can't deal with the real problem of it. And so as people are dealing with the symptoms, believing it's the problems, they are missing out on the problems, which is the underlying economic forces that are really out there that are creating the situation for the governments to react to. Once you see it in that fashion, it makes a whole lot more sense than why it is they're doing the things that they are doing. And again, if somebody is just like, I know why they're doing it, and it's because they have this whole political understanding of what it is, they're right. And their life is going to be affected by it. My life won't, because I didn't position myself that way. And that's literally how come it's so different for everybody out there, and why it is that I can look at the economy differently than somebody else who's looking at it from a political fashion, and literally have our lives change based on the political atmosphere in one way or the other. Some of it was impacted in a way that says, man, this hurt me. Other people that said, hey man, this impacted me because I needed to change the way that I am positioned. It's like that. It's literally all in the meaning that you have given it. Jared, thank you so much for the $3, man. I really appreciate it. Alrighty guys, I has gots to go back to work. I really appreciate everybody hanging out. I really thank you very much for them super chats and supporting the channel. We got $4.99 in super chats, 88 thumbs up. Thank you so much for hitting that thumbs up button. Continue to hit that thumbs up button. We'll get the YouTube algorithm to spread this video around for more people to join in. I really think that this is probably the most important economic indicator that really is almost non-existent out there for most people to understand, but yet you can now look at the rStar, understand that the neutral interest rate is where the Federal Reserve is neither restricting nor accommodating the economy. It's when it is neutral. That neutral interest rate rises and falls on an elevated inflation expectation or the lack thereof. And if the Federal Reserve stands still, that neutral interest rate can move ever closer to the Fed funds, making the economy less restricted. That is so far off of a concept for most people to understand that if you can internalize it, you will be miles ahead of everybody else. Uneducated economist, you let me know.